Hi, and welcome to this week's look at the major news stories that have happened or are about to happen in the last few days. We're going to start with major events still to come this week, and US companies start to publish their fourth quarter results this week. Now this is going to be quite important as net income data can show the signs of recession or a downturn. So it's something that's going to be looked at quite carefully. On Friday, we see Wells Fargo and Citigroup banks, as well as a few others, publishing their fourth quarter results. It is going to have an impact on the market, I would suggest, and certainly something to keep your eyes on. We also have US CPI data out later today, that's Thursday. Now this may well confirm the hypothesis that the peak of inflation has passed. Lots of talk about it over in the States, certainly something that's going to have impact across the globe. We've also seen inflation data out of Japan on Tuesday and Australia on Wednesday. If we jump across the pond, Friday also sees UK industrial production figures. Now these can be used and will be looked at to see if they show the onset of a protracted recession. In fact, Deutsche Bank predicts continued high inflation in the UK this year and tighter fiscal policy. I think it's pretty fair to say the UK is worse than the EU currently, where inflation has in fact decreased due to the lower wholesale price of natural gas and electricity. Doesn't bode brilliantly for the UK economy. In fact, the euro sterling chart provides some form of confirmation of that fact, with the rate rose 3% in the second half of December. And the bulls may well get some momentum on Friday with the outcome of these figures to break the current resistance levels. Certainly lots of data out this week is going to drive the markets. Make sure you stay up to date, use your economic calendars, and we wish you luck. Okay, well, talking about the UK, let's have a look at what's been happening with the Great British Pound the last few days. Well, cable, sterling against US dollar, and sterling against the Japanese yen seems to have been aiming higher. Sterling is showing positive signs above 1.200 against the US dollar. And in fact, there was earlier this week a break above the bearish trend line, and we're currently seeing it around the 121.65 mark. Let's have a quick look. Sterling against the yen. Now that also started a fresh increase above 158.50, which was previously quite a resistance zone. We are seeing a contracting triangle forming with resistance near 160 on the hourly chart. Those are the sort of main takeaways, but drill down a little bit more now. Sterling against the US dollar, it found support at 118.40 last week, and with a clear move earlier this week above the 1.2050 mark. Went as high as 121.36 and started what could probably be described as a consolidation phase. Currently we're looking at 121.40 being seen as the start of some resistance, then 122 the figure. Also looking at support down near 120.65. Flipping back to sterling against the yen, we saw a close above the 159 the figure mark, and we're seeing support at 158.8, roughly where we are currently. Certainly these two worth keeping your eyes on in the coming days. Okay, we're going to stay with the UK now, and despite what we were talking about earlier and the fact that the UK looks in a worse position than the EU and the US, the FTSE this week rocketed to a 4-year high. Thursday saw the FTSE hit 78.01. That's the highest level for 4 years by quite some distance. 18 months ago, we were looking at sensationalist headlines of the FTSE crumbling when it fell below 7,000. We're now looking at a situation where we could be looking at a run on 8,000. There has been massive volatility in corporate stocks over the last 2 years, that's fair to say. 2020-21, pharmaceuticals were up big, but travel and hospitality was down significantly. COVID, no getting away from that fact. 2022 saw energy companies and big oil up significantly. Obviously, we were talking about the energy crisis, prices rising dramatically. At the same time, some of the tech sector and airlines were down, maybe cancelling out some of these gains. So what's happening now? Well, there is a thought that this could be seasonal data that's driving the current increase. If we look at JD Sports, which is a huge sports retailer in the UK, they published figures for the 22 weeks up to December the 31st, 2022, and showing revenue up 10%. Sainsbury's, one of the major supermarket players in the UK, saw like-for-like sales increase 5.9% in the 17 weeks to the 7th of January. So volatility abounds. We are seeing these good figures out of companies, but it is worth considering those figures we've just talked about take in the seasonal holiday period for the UK. So it could well have had an impact. Volatility is still there, and of course at FXOpen we're now charging 0% commission on indices. Worth keeping your eye on the markets in the coming days. Now finally, are the US markets preparing for a bit of a shake-up? Thursday sees US CPI Consumer Price Index come out. Has peak inflation passed in the US? Now, if these figures show that, then we're going to see a less aggressive Fed rate rise situation. Things are going to perhaps slow down, and certainly increases may not be as drastic as we've seen in the past. Now, in anticipation of these figures, we're in fact seeing the dollar index and the oil price pretty much freeze. Interesting. People desperately want to know what these figures are going to come out at. The stock market is showing some signs of growth. And in fact, the tech sector in particular is looking positive after the 2022 bear market. Quick look at the futures market. NASDAQ futures rose to about $11,500 per contract. Now this served as support back in November and December, where we had a bit of a positive run. That was before the bearish breakdown of December the 15th to the 16th. Now with all this news, all these figures coming out this week, it's pretty clear there's going to be some impact on the market. And in fact, could the US CPI inflation data be a real driver for a market shake-up? Now with volatility across all of these markets, as ever, use your risk management tools. Most importantly, we wish you luck with your trading in the weekend. Bye for now.